Welcome to bonus class number 2 on quants and financial reporting and analysis, FRA. So we had, this is the second of 5 bonus classes, which are classes that are to help students with the pre-course reading to be done before the prep course starts for the level 1 exam in January. So in December, sorry. So the prep course starts at the beginning of August. Okay, so we've got a few more months to do pre-course reading. The pre-course reading focuses on the topics that are more factual, and it's basically to give you a head start once the prep course begins. So I think you'll be very grateful for any studying that you are able to do before the prep course starts. Okay, so 17th of March, we already had this one. And we talked about the Getting Started guide, which we send to all students, and the study plan, which is an Excel spreadsheet used for planning your time between now and the exam when you're going to study. And we talked about ethics as well and gave an overview of ethics, what you need to know. Okay, so 21st of April and what you need to read actually before the prep course starts. So today, 21st of April, quants and FRA. And noted that it's a feriado or bank holiday today, so congratulations, Susanne, for joining us. And of course, generally, CFA is not an easy exam, okay, which is why it's so highly regarded. And sacrifices do have to be made in order to study. So actually, feriados can be an ideal time to do some studying to catch up. Okay. So we're looking at quants and FRA today. Then in the next class, and we're having a class once a month, so the next class will be the 19th of May, and we'll look at corporate finance and portfolio management. Okay, then on the 16th of June we have equity, and the 21st of July we have derivatives and alternatives. And then on Thursday, the 2nd of August, we will start the December 2018 level 1 prep course. Okay. So rough overview. Okay, and then the pre-course reading. It says it's critical here. It's very important. It will make a big difference once the course starts because you will already have some background information and you will have less reading to do once the course begins. So you will really feel the benefit of doing some studying now. So we've set the following readings as pre-course reading, and you can see, so you've got the study sessions, 1, 2, 6, 10, 12. There are 18 in total study sessions. So these are only the readings that are set for pre-course reading. There are a total of 58 readings in the syllabus, and we have selected some for pre-course reading. So the titles of the readings that were selected are here, and the importance of each reading is here. So there are in fact 3 critical readings which are selected as pre-course reading. So important to note that they are critical, and we will spend more time on them in the course as well. Okay? It's just the pre-course reading is just to get a head start. Okay? So we've got suggested total number of hours. So you can see with these 3 critical readings, the total number of hours for reading 3 on ethics is 10, and we are suggesting pre-course reading of 3 hours to give you an overview. So it's just skimming through it. Actually, for ethics, as I talked about last time, it's about focusing on each of the 7 standards and the subsections in each one, and reading these sort of blue-grey boxes, which give you a summary, tell you what each standard requires. Okay. And then looking at the examples. But we will work more with ethics during the course as well. Okay, and then we've got time value of money and discounted cash flows, which we will talk about today. Those are in quants. So critical concepts, and again, we're expecting you to do some pre-course reading, but not, we will come back to those topics again. Okay, you can see here. So class 2 is today. We're going to be covering quants and FRA. So how does the methodology work for the prep course? The core material and the most highly examined concepts are covered on the prep course itself. The factual material or non-core material is set as home study. So once you sign up for the course, we will send you the study plan and Getting Started guide, which has lots of guidance on the pre-course reading, minimum of 25 hours. So this is a suggestion, 5 hours here, okay? Now, you may want to spend more time. The more time you spend, probably the better, but it is important to keep up with these bonus classes, otherwise you won't be able to get through everything. So in CFA you'll find there's a balance between reading everything, understanding everything, and getting through the material, because there is a lot of volume. So depending on if you're a very detailed person or not, if you're very detailed, you might want to tell yourself, okay, I'll come back to this. I'll get 80% of it in my mind and read it and kind of get it, but I'll come back, so it's okay. I can move on to the next topic. So this is why we have these classes spread out in the way that they are spread out, so that you do the reading related to each class before each class, ideally. Okay, so you should already have read the pre-course reading for quants and financial reporting and analysis. And the idea of these classes is that this is a place where you can ask some questions. So I don't know, Suzanne, if you managed to read anything yet. What have you read so far? Maybe you can tell me just in the chat. Okay, I'll continue, but I will have a look at your message. The Getting Started Guide, yeah, minimum 25 hours. The more you do, the better, okay? But again, you have to balance that with getting through the material. And we will support you with any questions you have. So again, the idea here is to support you with questions, okay? If you're finding it difficult to get through the material, please tell me, okay? There will be a quiz on the pre-course reading during the first class, so some questions, so come prepared. All right, Suzanne said, do let me know which readings you've already done and how you're finding it. Because many students are working with the CFA curriculum from CFA Institute, and sometimes it's quite dense, it's quite difficult to read, and it's not just due to English. It's actually, even for a native speaker, quite dense. There's a lot of material. So it requires some technique. Okay, so this is our suggested approach to the reading. So for each reading, look at the LOS, the learning outcome statements. What does the reading require you to know? What do you need to know for the exam? Every single exam question is based on a learning outcome statement, and there are around 500 of them in the CFA curriculum, split into 18 chapters, 18 study sessions and 58 readings. Okay. So each reading starts with 5 or 6 or up around, it could be up to 10 learning outcome statements. Around 10. Work through the CFA, so read those learning outcome statements so you know what you need to achieve by doing the reading. Then work through the CFA program reading. You don't need to read everything. Focus on achieving the learning outcome statements. And these are some examples here. So demonstrate the application of the Code of Ethics. So you need to know how to apply the Code of Ethics and Standards of Professional Conduct. Now, that's not very easy, and that requires a lot of work. Okay, this is why in this reading, which is, I think, from reading 3, it could be reading 2, one of the ethics readings, okay? There are only 3 learning outcome statements, but this first one is a big one. Distinguish between conduct that conforms to the code and standards and conduct that violates the code and standards. Okay, so you have to say if it's in a particular situation, if there is a breach, if the standards, code of ethics and standards of professional conduct are being followed or not. And recommend practices and procedures designed to prevent violations of the code of standards, code of ethics and standards of professional conduct. So practices and procedures. So you need to look at the recommended practices and procedures in the reading. You also need to look at the examples in the reading to see if certain behaviour is in compliance with the code of ethics and the standards of professional conduct. And demonstrate the application. You need to know what they require. What is required in order to apply the code of ethics and standards of professional conduct. So mostly you will get this through reading the examples in the reading. Okay, looking at the example scenarios. Okay, so that's what you should be doing when you're reading, focusing on achieving the learning outcome statements. Okay, and they're a bit different for the ethics is a bit different to the other readings. So the other readings, it could be, for example, know how to calculate a discounted cash flow, or know how to calculate the internal rate of return of an investment, for example. So then you need to know how the calculations work. You need to know the concepts. Okay, the calculations. You need to know you need to know formulae. You need to know how to do calculations, but they will be testing you on the concept. So they might be testing you know how a calculation is done, but not ask you to calculate it. So they might ask you for the impact of increasing the growth rate on the valuation of a share. If you know the formula for valuing a share, you will know how the growth rate influences it. So an increase in the growth rate is going to increase the value of the share. Okay. All right, so going back to the methodology, answer the questions at the end of the reading within 24 hours of completing the reading. So each reading, almost every single reading, has practice questions at the end of it, so make sure you do the practice questions. The readings also have summaries at the end, so you should read those summaries too. So read the summaries, do the practice questions within 24 hours. This is critical. If you don't do this, you can just forget what you've read. Okay, so it's very important to do the practice questions. Mark the questions you get wrong. Okay, so you can return later and go to the questions you got wrong and do additional practice questions. Okay, so that's important too, because you don't want to make the same mistakes again. Okay, so should I learn the formulas? There are many. Yes. Okay, so there are many formulas. That is very true. So what I suggest is that when you are reading the curriculum, you do not take too many notes. Do not take notes, not too many notes. But you should write down the formulae. Okay, so anything that you think, anything you need to learn, such as a formula, write it down, and you probably will end up with a kind of stack of notes, maybe about that big. Okay, I don't know, about maybe 50 pages of notes. When I was doing the exam, I had around 50 pages of notes of things that I found difficult to remember or knew I would need to remember. So it is important to do that, but you do not want to be trying to write the whole syllabus again, because there is too much content to do that. So be careful with the notes. Focus only on things that that you've got to learn, like a formula, or that things you for some reason find difficult to remember. Okay, so limited notes on what you should be focusing on. Okay, and also one point regarding this: we actually learn by doing practice questions. That is the most effective way to learn. So don't be thinking, oh, I must learn this formula right now. Okay, write it down, look at it every now and again, but focus on practice questions in order to learn the formulas. Really, it's the best way of doing it, because then you will be able to apply them, which is the important thing for the exam. Okay, so quants. Quantitative methods account for 12% of the exam, and we have 2 study sessions on quants. So you've got basic concepts and then applications. Okay. So first we look at the basic concepts, and then we look at how to apply quantitative methods to the real world. Okay, so the only readings that are set for home study are readings 6 and 7. So quantitative methods, basic concepts, time value of money. $1,000 received in 2 years is not the same as $1,000 received today. And why is that? 2 things. One, inflation makes the value of $1,000 in 2 years' time less than $1,000 now. Also, the risk that you might not actually get the money in 2 years' time means that it's worth less in 2 years' time than it's worth now. So what we do is we apply the concept of discounting, and we have discounting in the next chapter. We apply the concept of discounting to bring the value from the future back to the value today. So we discount the future value of $1,000 received in 2 years by 2 time periods back to today to find the PV, or the present value. So reading 6 and 7 focus on discounting and applications of discounting. So for example, when we are looking at investments, how much would we need to invest today in order to have $2,000 in the future? Or how much do we receive in 5 years if we invest $500 every 6 months, for example? So calculations like that. And it's important to be able to use your calculator, which needs to be the HP 12C or Texas Instruments calculator. But I think most people are familiar with the HP 12C. So that's one of the only 2 calculators allowed in the exam. So you need to be fast on your calculator. And actually, in the first class of the prep course, we do some practice calculations. We make sure that everyone is using the same settings on their calculators, and we do practice questions so that we cover all of the calculator keys that you need for the exam, for all calculations in the exam. So what else do we have in quants? We have statistical concepts and market returns. So there's some home study reading there actually. Some histograms, information on histograms. Okay, and then probability concepts, reading number 9, which is covered in class. Common probability distributions covered in class, sampling and estimation, hypothesis testing and technical analysis. Okay, so all of those covered in class, and we have 2 3-hour classes during the course. In the teaching phase of the course, our course is split into teaching phase, revision phase, and we have 2 mock exams, 2 simul-adls, 2 practice exams during the course. So one covers half of the content, and it comes halfway through the teaching phase of the course, and the other is a diagnostic exam, which comes before the revision phase and is designed to identify your strengths and weaknesses to help you in the final push before the exam. Okay, so we've got 2 3-hour classes during the course, actually in the teaching phase, phase 1 of 2. And then we have an exam debrief, which will cover quants questions, plus in fact, 2 exam debriefs, because there will be 2 exams that cover quants, and then a revision class on quants as well. So lots of practice in the course. Okay, any questions so far on quants? Just going to go through the learning outcome statements for reading 6 and 7. So the candidate should be able to interpret interest rates as required rates of return. So what is an interest rate? Is the required rate of return a discount rate or an opportunity cost? All means basically the same thing, and that's what we use for discounting future cash flows back to today's value, back to the present value. An interest rate is the sum of a real risk-free rate and premiums that compensate for different types of risk. So just as I said now about $1,000 received in 2 years does not have the same value today, it's worth less today because of inflation, but also because of the risk that you might not receive it, for example, okay? Which means we have to have a discount rate that's higher than inflation, okay? That makes the value lower today. Calculate and interpret the effective annual rate given the stated annual interest rate and frequency of compounding. So this is when we have interest paid during the year, we compound it. So we receive interest on interest, and this is showing you, this is the methodology for how to do that, okay, which we cover in class as well. Solve time value of money problems for different frequencies of compounding. Okay, so that's similar, but applying the frequencies of compounding. So for example, I have an investment and I am going to increase the investment by $500 every 6 months, and there is compounded interest. What am I going to have at the end of 5 years? So that's applying this compounding concept. Calculate and interpret the future value, SB, and present value of a single sum of money, an ordinary annuity. An ordinary annuity is a constant cash flow every year at the end of each year. An annuity due is a constant cash flow every year, but paid first at the beginning of the year. And there is an adjustment you need to make for discounting there. A perpetuity is a constant annual cash flow paid forever. So an annuity has an end date, a perpetuity doesn't. So it's a constant cash flow. It can be a constantly growing cash flow as well, payable forever. And a series of unequal cash flows, which you have to discount separately. Or you can program into your calculator, if you've got, say, 3 periods of the same cash flow, you put n is equal to 3, the number of periods is equal to 3, and then you do the next periods. So again, you need to learn how to use your calculator for this. Demonstrate the use of a timeline in modeling and solving time value of money functions problems. So timeline, very important. So you've got time 0, time 1, time 2. So you need to be very careful to make sure in questions that you understand exactly when the cash flow is happening so that you discount with the correct discount rate. Okay, extremely important. Okay, and then reading 7, discounted cash flow calculation. So this is calculating net present value, the internal rate of return of an investment. IRR is when the net present is the rate at which the NPV, net present value, is 0 for an investment or for a project. And we compare NPV and IRR, calculate and interpret a holding period return. So we cover this in class 2, but it's basically the return over a time period, and we annualize it. Okay, and we can combine, if we get a holding period return for 6 months and another one, 2 holding period returns, so one for 6 months, one for another 6 months, we combine them together to produce the holding period return, the return over 1 year. Calculate and compare the money-weighted and time-weighted rates of return. So money-weighted is an IRR, internal rate of return, and time-weighted is like a holding period return. Evaluate the performance of portfolios based on these measures. And then calculate and interpret the bank discount yield. Okay, so this is very definitely home study. So these are for money market instruments, how we calculate the value of money market instruments. For example, treasury bills are sold at a discount. So that means the face value is 100 and they could be sold at 90. And we need to work out the annualized percentage return, which is called the bank discount yield on T-bills here, for example. And convert among holding period yields, money market yields, effective annual yields, and bond equivalent yields. So different definitions, different measures of yields or the returns on investments. And we need to be able to understand those and how they compare to each other. All right, so that was a very brief overview of quantitative methods, okay? And then moving into financial reporting. So, Suzanne, I don't know, have you started doing any of the readings yet? Okay, which ones have you done? Okay, so financial reporting is 20% of the exam. So it covers 4 study sessions, 6, 7, 8, and 9. It has the highest weight in the exam. So it's, the 20% is the one topic with the highest weighting in the exam. The second highest weighting is ethics with 15%. Okay, so all right, so we're going to have 5 3-hour classes in the course on financial reporting and analysis in the teaching phase. Plus we have a revision class, and also in the exam debriefs where we give you feedback on the exams, we will talk about the financial reporting questions in the practice exams that you do. Okay. So home study is basically study session 6, okay, which is an introduction to financial reporting and analysis. So we've got introduction, financial reporting mechanics, so that's, you don't really need to learn double entry, debits and credits, but you need to know the impact of a transaction on the balance sheet and the income statement and the cash flow. Okay, so you need to understand how transactions, accounting transactions, are recorded in the financial statements, and you need to understand what the financial statements are. So we have an income statement, we have a balance sheet, we have a statement of changes in equity, and we have a cash flow. Those are the main ones. And a statement of other comprehensive income. Okay. And then financial reporting standards. So we have international financial reporting standards, which are applicable in Brazil, IFRS, International Financial Reporting Standards. We also have US GAAP, which is applicable in the US. They are converging, and this reading talks about that, which means that new standards which are issued are generally the same, or if not the same, only with small differences between IFRS and US GAAP. However, there are still quite a lot of differences. So for CFA, you need to learn those differences. Okay, and this is going to be very useful, and actually comes in the other readings too. We look at the differences between IFRS and US GAAP. If you ever have to analyze a company that's been with the financial statements prepared under US GAAP and compare it to a company prepared under IFRS, you will find this extremely useful, because the CFA brings out the differences between the two. Okay, so other readings, we've got income statements, balance sheets, and cash flow statements. Okay, so then we'll go through this in detail in class. What's in an income statement? How do we measure revenue and costs, expenses? Cash flow, what goes in there, how do we calculate it, balance sheet, financial analysis techniques. This is the one critical reading from financial reporting and analysis. It is ratio analysis, basically. So there are lots of things to learn in there, lots of ratios, okay, like asset turnover ratio, for example. Okay. All right, Suzanne, no worries about the audio. Hope you're feeling okay. Okay, but it's fine, I can read what you're writing. So I thought you've read the first part of reading 21, okay, that's good. Let me know if you're having any problems with the readings, okay, because I need feedback from you is important, okay, so that I know how to help you. Okay, and then readings 8 and 9. So we've got, in reading 8, we focus on certain balance sheet items, inventories, long-lived assets, which are fixed assets, such as property, plant, and equipment, income taxes, which includes deferred tax, and non-current liabilities, such as bonds, loans. Okay, so if a company borrows money, it has a liability for the loan, and we measure those loans at what we call amortized cost. So we will learn how to do the accounting for that during the course. Okay, and then bringing everything together, looking at financial statement quality, manipulation of financial statements, how we can recognize the warning signs. So that's quite an interesting chapter too, and it talks about some of the corporate accounting scandals like Enron and WorldCom. All right, so financial reporting analysis, just an overview again. So 20% of the exam, you are not expected to be an accountant. You don't have to be an accountant. You are expected to be able to analyze accounts, which is interesting about CFA. Okay, it's not about preparing financial statements. It's about understanding them and analyzing them so that we can make decisions. Why do we analyze financial statements? It's basically for decision making. So it could be, do we decide we're going to invest in this company, or do we decide we're going to lend money to it because we believe it's got it's going to be able to pay the money back, it's got a good credit score, for example. Okay, so various reasons, but basically decision making. Okay, so we need to understand how the accounts work, know the key ratios in order to analyze them, know the impact of different accounting policies on the comparability of accounts, so IFRS versus US GAAP, as well as within an accounting, within IFRS, for example, there are some judgments that you make in order to work out how to apply the standards. So that will affect the comparability of the accounts. Analyze and make adjustments. So we might need to, as an analyst, make adjustments to the financial statements in order to make them more comparable. There is repetition and overlap in the syllabus readings, so we reorder them for logical flow and to prevent duplication. So within the course, we follow a logical progression, so it doesn't strictly follow the readings, which are quite repetitive. So the reading talks about balance sheets, then talks about balance sheets again. It's all a bit not structured in a logical flow, so we change a little bit the way that we cover them in class to make it easier for you. So reading 21, an introduction. So what are the roles of financial reporting and financial statement analysis? Why do we do it? Basically for decision making again. What are the roles of the statement of financial position? So why do we have a balance sheet? That's the statement of financial position. Statement of comprehensive income, what does that show? That shows the earnings for the year. Statement of changes in equity shows what has happened to what the shareholders own, basically. And statement of cash flows. Cash is actual cash flow, not necessarily the revenue and expenses that relate to the period. Okay, because sometimes we don't receive revenue until after the end of the financial reporting period. So that revenue is included, if it relates to a financial reporting period, it's included in the statement of comprehensive income, but it would not be included in the cash flow because it has not yet been received in cash. Okay. Describe the importance of financial statement notes and supplementary information, including disclosures of accounting policies, methods, and estimates and management commentary. So here, there is a lot of information in the notes. The explanatory notes or the notes to the financial statements, which is useful for analysts. Describe the objective of audits of financial statements, types of audit reports. So we cover this in class. What are the types of audit reports? We have qualified and unqualified. Unqualified is a good thing. You want an unqualified audit opinion with no problems. Identify and describe information sources that analysts use in financial statement analysis besides annual financial statements and supplementary information. So what information do we use? We could use the statement management's commentary. They talk about the strategy for the company, what they expect to happen. They talk about financial statements, etc. Describe the steps in the financial statement analysis framework. So what do you need to do in order to analyze financial statements? Home study, okay, mostly. Some things we'll come back to in the class. You're going to find it is not a waste of time covering something that we mention in class as well, okay? You will understand it better if you've already looked at it. And our methodology works that we ask you to read the material before each class, okay? So the more you do now, the better. Financial reporting mechanics, okay? So how do we classify business activities for financial reporting purposes? So, for example, if a company buys a fixed asset, it will be recorded in the balance sheet as a fixed asset. Explain the relationship of financial statement elements and accounts, and classify accounts into the financial statement elements. So elements are assets, liabilities, revenue, expenses, and equity. Explain the accounting equation. So accounting equation, assets are equal to liabilities plus equity. Now, I talk about this a lot in the course, but basically you've got your asset side of the balance sheet, and then those assets are financed by liabilities and equity. And your balance sheet must balance. So if your assets are 1,000, your liabilities and equity must be 1,002, because you buy assets with the financing you get from your liabilities and equity. And then you use those assets to generate a return, which is paid to the providers of debt and equity in the form of interest and also in the form of dividends for shareholders. Describe the process of recording business transactions using an accounting system. So how do we record transactions? Describe the need for accruals. We will talk about this in the course as well. What is an accrual? An accrual is an expense you haven't actually paid yet, but you are recording in the financial statements for this particular period because it relates to this period. So you record it in the statement of comprehensive income or the profit and loss statement. Describe the relationships among the income statement, balance sheet, statement of cash flows, and statement of owner's equity. We talked about that really recently, just now, but you've got to understand a transaction will impact more than one, could impact more than one financial statement. Okay, so for example, if we buy some fixed assets, there will be a cash outflow, and we will record those fixed assets as a balance sheet item, an asset in the balance sheet, and we will record depreciation in the income statement. Describe the flow of information in an accounting system and describe the use of the results of the accounting process in security analysis. And how we're going to use the financial statement information in security analysis. Okay. And then finally, reading 23. Lots of learning outcome statements here. Objective of financial statements. Why do we prepare them? Roles and attributes of financial reporting standard setting bodies. So who sets the financial statement standards? The FASB in the US and IASB, International Accounting Standards Board, for IFRS. Okay, describe. I'm just going to go high level, okay, here. So status of global convergence. So remember I mentioned the convergence of US GAAP and IFRS, so you need to know about the status of that, and there is some information in the reading. IASB here, the one I mentioned that sets the standards for IFRS, International Financial Reporting Standards. So they have a conceptual framework, which is very important, and sets the basis, basically, for accounting under IFRS. The general requirements for financial statements under International Financial Reporting Standards, key concepts of financial reporting standards under IFRS and US GAAP reporting systems. So again, you need to know about IFRS and US GAAP. Identify characteristics of a coherent financial reporting framework and barriers. So describe the implications for financial analysis of differing financial reporting systems, and the importance of monitoring development of financial reporting standards. So there are changes always. So we need to keep up with those changes to understand what the changes are. Okay, like in any profession, it's necessary to keep ourselves updated. Analyze company disclosures of significant accounting policies. Okay, so companies make disclosures in their financial statements. We need to be able to analyze them. Okay, so high-level overview of the pre-course reading for Quants and FRA, done. Okay. The idea, as I mentioned, is for you to do the reading before the classes. So the next class will be on the 19th of May, and it will cover corporate finance and portfolio management. So I would like you to read the corporate finance and portfolio management readings, pre-course readings, before the 19th of May, so you can come with any questions you've got. Okay. So what are the pre-course readings? So for corporate finance, it's just one. Corporate governance and environmental, social, and governance factors, an introduction, ESG. Okay, so we suggest you spend about an hour reading that. It's quite long. It might take you more than an hour. Okay, but see what you can do in an hour. Try to skim it. Read quickly. Skim or scan, I think scan actually. Try to scan through to get the meaning from it and to meet the learning outcome statements, and then spend additional time. So do an hour, see how you do, read as much as you can, and then if you want to, spend a little bit longer. Okay. It's very factual. And there are, just to give an introduction to corporate finance, it's 7% of the exam, and there are 2 study sessions. So it's missing the name of this second one, but corporate governance and ESG and introduction is quite different to the other readings. So this one is a very factual reading about what good corporate governance means. So for example, the structure of a board of directors. Who should be on the board? Should they be independent or should they be executive directors? Who should be responsible for setting the remuneration of the directors according to good corporate governance guidelines? Who should be responsible for nominating candidates for election as a director? Okay. The independent, non-executive directors who are not involved in the day-to-day operations of the company. Okay, then the other readings are more to do with calculations for investment appraisal, for example. So capital budgeting. How do we decide how to allocate the capital, the finance that we have to different projects? How do we calculate the discount rate? What's the cost of capital? How do we measure leverage in a company, which increases the risk of the company? And how do we manage working capital? So those are kind of more numerical areas, I suppose, quantitative areas. Quite different from reading 34. And we cover the remaining readings 35 to 38 in the course. Okay. And then portfolio management, also 7% of the exam. We will do a 1 class of 3 hours in the course, plus an exam debrief and a revision class on portfolio management. So 1 study session, home study readings 39 and 40. So portfolio management and overview is an introduction to portfolio management, and then risk management and introduction. So both introductory chapters, 39 and 40, they are pre-course readings to be done before the next class. Okay, so that we can go through anything that you have questions about. Okay. And then risk and return part 1 and part 2, and then the basics of portfolio planning and construction we cover in the course. So that was a very high-level overview just to get you on track with the pre-course reading. Okay. So Suzanne, any questions before we finish? It's all about getting familiar with the content. CFA level 1 is about volume of material and also about depth. So you have a trade-off here. You do need to understand the material in depth, but you are not going to understand 100%. because there is so much volume. There's a lot of material to get through. Okay, and again, that's why we're doing the pre-course reading. Okay, I'm glad it's all clear, Suzanne. Okay, please just remember, anything you do now is going to make your life easier in the future. Yes, if you have any questions, you can send them in the WhatsApp group. Okay, please do. The more I hear from you, the happier I am. Okay. All right. And if anyone wants to join these classes, anyone who's watching the recording wants to join the classes and join the WhatsApp group, please contact us, and you can see the email address here. Okay. Also, there is a contact form on the website. All right. So hopefully you found this class useful, and the next class will be on the 19th of May, bonus class 3, covering corporate governance and portfolio management. Okay, corporate finance and portfolio management. All right.